The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi folks, Basil Chapman on the first day of November, and we're looking at, here in the Tiger Technicians Hour, we're looking at the S&P futures up 25 cents. It's a very quick move at 38.83. I just wanted to show you this because I talk about it all the time, and people have asked me in your show, do you mind just taking a couple of minutes each time just to show us in live, real time, what you're looking at? So this is, look, what happened yesterday at about, what was it, 7 something or other. I said when I came on at 10 o'clock, I mentioned that that we were looking at peak Ds in the Chapman wave methodology, and that we were very close to making one in the 10-minute chart. Then we got that pullback sharply to what? The 200-period moving average. But look what happened. When was this? That was right there at 19:10. So that's in the evening, 10 minutes past 7. I remember actually watching this. The 9-period moving average, the price went above it. And can you believe that all the way from 38.90 to this crossover at 9:50 this morning at 39.01, and it had gone all the way to 39.2800, round number high at a peak G in the Chapman wave methodology. Look at this beautiful trend line resistance. I didn't actually have time to make it a double line just to show you. Look at that. It starts all the way from that rally in the evening. And this trend line, look, I'll make it green here, and it's unbelievable. How does a market know to keep hitting a rising or a falling? In other words, a diagonal. I understand horizontal lines. People remember numbers very well. Oh, 3,200 or 3,500. 30. But when it goes 32.10, 32.20, 32.30, how does it know to make that angle and keep stopping at that number? I always find that I have a reasoning for it. It's not a mathematical one. It does have touches of mathematics to it, but it really is more an emotional one, which you cannot measure. And it says that what happens is that every time the market is holding a particular support level, like a rising tide, it has a certain percentage that it can go up before it gets overbought or it gets the exuberance fades. And that's exactly what happened. And look what happened. It failed. And the doji candle right there in the 10-minute E-mini chart at 8:40 this morning pops up to 39.28, and then small candle, gaps down, hits the 9 and 14-period moving average for the first time in a half an hour, and then plop, goes under it. And finally it goes red. And then what I had done this a little earlier actually. I reconfigured it a little later. But look at this. I've got a left side, right side. I call this bar symmetry to the low that was made right here, this candle at 15:10, that's 3:10 on the 31st, that's yesterday afternoon, to the low that was made right there at midnight, 40 minutes past midnight, so that's 10 minutes to 1 Eastern time. That low at 38.93, I used that as the right side bar symmetry, and it missed it by about 6 bars. So that's actually a lot of time. It's 6 bars of 10-minute bars. It's 60 minutes. But isn't it fascinating how close it got? And now it's pulled back. And this is about where you start to see. At this, I should have taken it to this low right here, but I didn't expect such a sharp move in such a quick period of time. So, all right, enough with that. And now what we're going to look at is what's going on. So what's going on in Chapman wave methodology? I always like to say, if you can identify a low bar and then that starts to rally, if there's an upgrade because of the technicals and the price movement from a buy signal to a buy mode in the Chapman wave methodology, it means that you should get at least 4 higher peaks. At that 4th highest peak, and I got a question came in, do you lighten up or go short at peak D when the D is confirmed, or in leg D? That's a fantastic question. So I have a variety of ways of dealing with this. Why? Because in this particular move, because in the Dow, we got in so nicely, so low down for the diamonds, plus we have the diamonds from the low back in 2023. We still have some long position in the Dow from there. We have a little comfortability factor. So I love the action. Look at the MACD, even now with this pullback, with a new recovery high. Look at that pullback. The MACD is barely moving. Yes, the histogram is changing. That's the vertical line there. That's the 0% line. It's just starting to pull back a little bit. Stochastic is flat at 95%. I love that. Finally, you got that on balance moving very nicely. Not great, but it's nice enough for me to say, you know what, this could have a longer term aspect to it. I'll get into that in a moment. This gray line, the daily chart on the left, is the relative strength. I love that. That's acting so nicely. This bumpy, you see the MACD and you see the stochastic, very often they take the form of the price you're following. So you see this arch and pullback. You see the way the green line zigs and zags like a W formation. Well, look what happened here. You've got the same thing. But look in the weekly chart how the red slower moving average, the 26-period moving average, is holding so well. And we've got a very positive divergence. And finally, we're bumping into, in a single leg, A to the upside rather than B, which has been every other time. We're bumping into the Chapman wave inside track repellent zone. And the monthly chart, month of October is done. I don't think this is the traditional engulfing candle that one would talk about, but for me it's an engulfing candle in the sense that it made lower lows than the big candle of September and a high, much higher high with a much positive close in the monthly chart in October above the September high, and for 1 month at least, for the first time in 5 or 6 months, it's closed above that 9-period moving average. And yet, no, the 9 and the 14-period moving average in the monthly, but I need to see that pink line, the 9-period moving average in the monthly, cross positive to go green. That'll be the best sign we could get. It's going to take a little bit to do that. And the same thing, look how close the 9 is about to cross over in the weekly chart of the Dow, because that 31,351 is the pink line, and the black line is, if I can get that to click, is 31,398. They are so close to crossing positive. The MACD is good. We've seen this bounce before in the W formation. I need much more than that. And the stochastic at 43 is improving. On balance one is not very good. So I want you to go through that. Just quick summation of what we're looking at and why I'm looking at this. And I'm becoming way more positive on the overall market. But I'll talk about that when we get back, because you cannot have the general leading without the troops. And if you look at the S&P, leg E, big red candle now in the daily, that's not acting nearly so well. I'll be back. Dow's down 77, S&P's down 7.5. Basil Chapman, Tiger Questions Hour, and I'm ready to take as many questions as you can send me.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
So you can see in this particular chart here how many times the obligation of the Chapman Wave methodology is to get you from a buy signal upgrade to a buy mode to get you at least to the fourth highest peak, peak D. Peak A is the first, B is the second, C is the third. Fourth is D. You can go higher than that, but D is your objective. So we had one peak D in the 1 minute chart at about 4 something this morning, at about 4:14, pulls back, goes to a peak D again at about 5:40, pulls back. It actually squeaks to an E and starts a brand new ABC. 1, C2 goes to a D, like this is really more like a rogue wave to the upside. Pulls back sharply and goes A, B, C from the low that was made at about 7:20 this morning. It goes A, B, C, D, E, and F. And that F was the big move to the upside, turns around. And I did this, but then I was about to do the show, so I couldn't follow it through. That was from the 9 o'clock turnaround. And look, here's your left side, right side price time match would have taken you to about 9:30. And in fact, it did start to fall, and by 9:33 or 9:40, it's down and breaks that 39.05 level. So now it's in an area where there should be some kind of support. Now let's go back to the question here, and I think that's a great question. Do you get out? What do you do at a leg D or a peak D in the Chapman Wave methodology? So this is what my thinking was. Because this has been such a spectacular move, and there's something that I call the Chapman Wave squash, which occurred right here between the MACD and the stochastic. But then there was that sudden 8:30 move, sudden sharp slide that Thursday a week ago, the 13th of October, went down to a lower low. I can't tell you. I thought I was going to have a whole show on it yesterday, and I didn't. Maybe I'll do some today if I have time. But these double bottoms and double tops to within pennies sometimes, even if it's a $300-something stock, it goes to within pennies. Well, here's a $28,000 stock that goes from $28,715 to $28,660. I mean, 50 points with a Chapman Wave dreaded H pattern goes under it but closed sharply above it, that's usually positive, but that doesn't mean a thing until it closes sharply above the arch so that the lowercase h can become a cup formation. Wow, did that do that? So we were long before we got stopped out on that sudden move, but we jumped back in. So we long the diamonds. We added the 3 times long, the UDOW to that. Today we took a tad off for about 30% profit in that tiny position that we, out of the whole thing, we just took a little bit off. And I wanted to do it because my theory was in this Mariposa candle from 3 days ago, and that's that Friday candle, especially when it's after an extended move. When it's like this one here, just starting, and that was, I think that was even the day we went long, the 21st of the 3 times long Dow. That says if there's another gap up, you've got a tremendous up move to come. Well, if it comes towards what I wouldn't say the end of the move, but when it's after an extended move, my reasoning always is that the next session should be either a small doji candle and then a down move, or there's an immediate down move. The absolute best alternative, which is very rare when you've extended this far up using this Mariposa candle, which is basically a candle with no wicks. I'm a little loose about that. I just want a huge candle, and you've got to get, you might get no wick on one side, but either way you can see there's just a tiny little wick at the top and the tiny little wick at the bottom. I consider that a Mariposa candle. So we did get the doji candle. And the reason why I said that for today, we want, if it goes 1 penny above the high of yesterday, of 2 days ago, and that would be 32,889.81. If it goes to H2, that starts leg D. I want to take a little bit off. We still got our good core position. We've still got our good core position in the diamonds. I thought the best thing here, because we're getting so close. Now I'll talk about bar symmetry. Bar symmetry is, I love it when it goes to the exact low of a move in more like a V or a cup formation, and it says, you know what? If we start to track to the upside, or if it's an arch formation, if we start to make lower lows, and we curve over, there's a really good chance, if the pattern fits, that you could have a plumb line that is in the exact midpoint, so you get the exact number of bars to the upside, to the exact number of bars on the downside, or vice versa. So what I'm looking at here is that I couldn't do that, but there's another technique where on the arch of a peak, like a dreaded H, that A or B minus that fails, that's where you could use that if it helps. Or on the left side, use a particular candle. So I did that once, and it fitted perfectly to the 32,504 target. That was the exact bar right there. It actually hit it 32,388, just missed it, and then just sliced right through it on Friday. Once you've used that up, you have to now find something else. You can't necessarily use the same plumb line, so I have to use it. So this is where there's a certain license, but I have a methodology for that. I cannot just do it arbitrarily. I usually use it either with a Chapman inside wedge target resistance line as a resistance and see where the midpoint would be, or I find a particular candle. Anyway, left side, right side price time match says that to the 26th of August high of 33,364 on the 26th of August, we have another day or two to go to the 3rd of November to get there. It's starting to look like the technicals have improved tremendously, but there's a chance that we start to pull back. So what I said, we'll take something off, but now we want to put back, because I like the technicals enough, and the Chapman Wave inside track resistance in the weekly chart. Look at this. 2 simple lines. Everyone can draw it. There's nothing fancy here. I did change color. Maybe you don't have colors. Big deal. It's the same thing. I don't have to put all these colors and all these lines in. I can mostly see it visually. I've done it hundreds and hundreds of thousands of times. So it's easy for me, but I do this as demonstration. So now what we're looking at, why did we take profits today? Because I didn't expect, number one, that because of the doji candle of yesterday and the Mariposa candle of Friday, that any move would extend to the upside right now because there should be some kind of a pullback. We've got the election a week from today, although from the newspapers and all, and from the news, there's not all that much talk about elections at all. Media is not wanting to talk about it very much, at least here. They might mention it in passing, but it's not the biggest deal. I'm looking out, and Mr. whatever his name is over there on the house, 3 across the street, two houses down, where I don't think I've ever not seen him put all the signs up of all his favorite candidates. Not a single sign. And I think that's to do with the fear factor that's been evolving and just becoming it's now a factor that you can see visually because there are so few signs out. So it says to me, maybe we're going to have a little nervousness in the next few days as people await the results, and then the results of the results. I don't know. That's the way I'm looking at it, and that's what the chart is saying to me. I'll be back. There's a lot to discuss. We did that, so I decided to take it off. Otherwise, I would have waited for a peak D and then a pullback to take some money off. But this was a precursor to what I was expecting.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi, folks. So just looking at some things that I thought I'd go to. I'd shown my subscribers on my almost hour-long video on Saturday, just for subscribers in my overview. And I said there are a couple of stocks still in the single digits that are having spectacular moves. Here's one, Zeta, which is Zeta Global Holdings, data-driven marketing technology. I mean, I don't know how many firms use that. But how do you get into something like this? Because it hardly gives back anything. So I should have closed my eyes. I said this on Friday. So Monday, I should have just said, grab it. And we just close our eyes, put in a stop, and see what happens. So yesterday the low was $7.91, and today is trading at 881, almost. So, I mean, this is like a 10% move in just 2 days. How do you deal with these? So there are plenty of stocks to look at. I mean, I had one the other day, WTTR, and then I said, oh, it's just gotten away from us. I don't think I can get it. Well, the target, I drew everything in. Here's exactly the patterns that I was doing. There's a Chapman wave inside wedge target resistance line. There's the left side, right side, bar symmetry, price time match. And it broke, and my target was the 962, was it? 969 high of the 8th of June. Didn't get in because it's very hard in these screamers, I call screamer stocks that are under $10, that you got to close your eyes. If they're in the leg C or D, those Ds can extend, unlike most of the other Ds. And look at this. Here's your D. It went right to the target line yesterday, then above it at 984. And today is having a little bit of a red candle. Isn't that amazing? So within that context, there are, and this is Select Energy Inc., water management to the oil and gas industry. I thought this was a nice way to play it because you got the tools rather than the actual commodity itself. I think it still looks great, but now it's very extended. So there are places to be. We did choose a single-digit stock this morning, but this is not. I didn't think of this as a screamer in this particular instance because it's part of infrastructure. And I think there's going to be a lot more talk about infrastructure at this particular stage. So we've got a very tight stop, whatever it is. There are places to go, but there are great companies that are moving beautifully at this particular point. So I'm just waiting for a pullback so that we can really continue to put money to work on the long side. I think all the shorting pretty much has been done. Yes, there are stocks. I mean, you can still go to something like Facebook, Meta. I mean, it's getting close to some kind of at least attempt at support. But this is a stock that had gone from 123 back in December 2018 up to 384 in September of 2021. So that's almost 3 years. And now it's trading at 95.25. They did everything wrong. And the chart is saying that. So this is still a very selective move. This is different to almost every other time that we've had moves because you've always had the tech sector. I think there's been a rotation. Why did I spend so much time today talking about the Dow? Because the Dow 30 is the right mix at this particular time. To not be looking at it seriously is I think, an oversight. That doesn't mean to say the other areas. So let's go to other areas. We're going to do that right now. Question came in, could you look at natural gas? Well, let me just do this first. I want to go to gold. Gold is giving back some of the gains. It's really struggling. Remember I said, think of VIXY, Dolly, Bondi, Goldie, Crudy. Think of them separately. They don't always work together. And here it is. The dollar is down, and yet gold cannot hold a rally. There's something not right with gold at this particular time. I think I understand why. But when does gold really pick up strength? And I think it's going to come. I think we're getting closer and closer where gold will kick in as a sector that has really good upside, but just right now it's a huge digestive phase, and that's what we're looking at. So I said I'd go there, and I'd go to silver, and then I go to high grade copper, and then I want to talk about natural gas. So silver is gone. This is the continuous contract. Has gone to a leg C. It's a much nicer chart pattern than gold. Maybe gold will catch up and then silver will start to lag. But so far, silver, not the weekly, but the daily chart's got a nice V-shaped turnaround, acting okay, 19.69, up 57 cents. Not great, but actually acting better than gold. Look at high-grade copper. So high-grade copper is having a nice move today. Chapman wave inside track repellent zone. It spiked above it for 3 days, and then it pulled back sharply. And if you look at the weekly chart, it's really just a rectangle formation. Nothing really there to see. So now comes the question about crude oil. and crude oil says still stuck in the range, but it's starting to build some strength. Can it build enough strength to start to trade in the 92, 93 area, which would be a really big positive? At this particular point, we'll have to just watch it. It's at 88.58 in the inside track repellent zone. I might have to move those lines a little bit, but right now they're working just fine. And now we can go to natural gas. So natural gas had a huge spike yesterday, a spike up, but it's all within the context of once being over 10 and now trading 50% lower at the 5.86 level in the continuous contract. The UNG, this is the United States Natural Gas Fund, which I was going to get into when I saw the potential for a doji candle. I almost sent out a memo to my subscribers to say, hey, let's start a position in the UNG. I don't know if I want to do that yet. For some reason, it's not acting the way it should in terms of everything that I'm reading about natural gas and everything I'm looking at. After all, we're coming into the winter season. Is this just telling us that maybe the winter's not going to be so bad? We've got prices coming up here I'm in Newton, Massachusetts, so the Boston area, that they've already said 68 or something percent, 62% increase. But when you look at the figures, it possibly could be higher than that. That's going to be very detrimental to homeowners. And imagine all the people that just bought houses recently. They fought and they overpaid. They didn't even get a contingency plan. They didn't have an inspection or an inspection that counted. Now they not only have the repairs to do, but their oil and gas prices might go through the roof. Wow. All right, enough with that. So UNG, I would just say this. I need a little convincing, because everything about seasonals, everything that I've looked at, everything that I wanted to do says it's just not quite right. I would rather be paying for the trend to be convincingly up, and that would say if there is in UNG, if we can get into the gap of 21.54, wow, that's over 2 points. So, I mean, it's like 10% higher. You want to pay 10% more? Well, this is a potential arch formation. The MACD is okay. Stochastic's very weak at 30. The on-balance volume is weak. The 9 is still way under the 14. I need convincing. So I'm not yet. I hope I'm ready for United States National Gas Fund, because it could be a fantastic move, even if it's just trading in this big rectangle formation for the next 3 or 4 months between the let's call it the 18s and the 32 level. The 34s was a resistance. That's a fantastic gain, but so far I haven't got any proof of that. So the question is, would you buy a UNG? And the answer is, the gaps to the upside are what you got to worry about, because now you pay up if there's a gap. So I'm saying at 19.03, if you're prepared for a 4% risk right now, I would say yes, you could just start a small position on that. Then you could start to add if it really starts to want to go to the 200-period moving average of 23. But at this particular point, I think it's a little bit risky. I'll be right back. Basil Chapman. Dow's down 60, S&P's down 2. I've got a lot of questions that I'll deal with when we get back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
I've always had a question in the den about COWZ. COWZ is a symbol that's trading 46.73 up 29 cents. Leg F. This could be a Chapman Wave instant restart, so it could be F/B. I don't have to do anything about it right now. The MACD is good. Stochastics at 88%. On balance volume has pulled back after being a little bit overbought. It's now nicely above the 200-period moving average of 45.56. That's your key support level. The weekly chart has just broken, and the beautiful down channel. Look at this, folks. You have a pullback from a high of 51.10 the week of the 10th of June. It pulls back and gaps down, in fact, and makes a low on the week of the 17th of June at 42.79. The next week, the low is 42.72. Tries to rally, fails, and it comes back to where? An exact trend line hit of 42.46. Rallies, can't hold it, makes a low of what? 42.21. Rallies, can't hold it. What does it do? It comes down and makes a low of 41.91. Look at that unbelievable trend line. And then, of course, I put the Chapman Wave inside track, propellant zone. It rallies sharply, turns around at 48.66, makes a dreaded H pattern, takes out the left side low, but within 2 bars, it's actually 3 bars, it closes above the left side low. But what is the trend line? The trend line is the Chapman Wave inside track propellant zone, upper trend line, hits exactly. Again, look, it makes, I mean, how does it do that? 40.27 on the 20th week of the 23rd of July, and the very next week, the low is 39.95. I'd already drawn this in as a parallel inside track propellant zone, and it came down after screaming to the 48s. It comes down to 40. I mean, that's a 20% decline, and it stops dead on the support level. Now it's broken the resistance. I like this very much. Pacer, US Cash Cows, 100 ETF. I mean, that's the name. I'd never seen this before. I used to have a whole list of all these really cute names of ETFs that were the actual, like the DOG. We had the DOG until we got out of it on Friday, which is 1-to-1 short the Dow. I've been there since August, a fantastic pullback. So the dog. So, okay, This one is the Pacer US Cash Cows 100 ETF. What does it have? It's overweight energy, healthcare, and materials. So I like it a lot, but it is starting to make lower lows and lower highs. So I believe you are long. If you are long, then I'm just going to say all I would do at this particular point is I'd watch the 45. You can even go down to 45.10, 44.90 area. If it starts to go under that, I say, you know what? It's going to have a rest period. It's going to go back underneath the Chapman Wave inside track weekly propeller resistance that became a propeller zone, and it'll go back to being resistance. But in the meantime, it's holding really well. If you are not in it, do you add? This is really tough. It's in the right area. I think energy is very close to some kind of a pullback, just a pullback. I mean, a digestive couple of, maybe even 2 weeks or so. Healthcare has been amazing. IYH, is that IYH? Am I correct? IYH. Yeah, US healthcare looks almost the same chart. Oh, it's almost the same thing. It's the same thing there. That's on the very short term. It's a little overbought. I'd say, you know what, hold off a little bit. If you're in something like this, wait for it to do a test. And in this case, the IYH is at 275, 270 to 268 are the moving average support levels. Would I add right now? If I'm not in it, would I? Oh, if I'm not in it, I would split an opening position. And the first part of the opening position, if you want, it's in a leg D. I think it's going to be pulling back. I'd say you could start your position in the IYH at 273, but that wasn't the question. XLB, I believe, is the materials. Yeah, select materials, spider fund. Oh, this is a different pattern. This is making low lows and lower highs. It's just that I can't tell you how many times we've made these. Look at this double bottom. On the 27th of September, the XLB, S&P Select Materials Spider Fund, makes a low 66.85. It rallies sharply to the 72 level, comes back down, and it goes to 66.86. 66.86 to 66.85 means that this is an A, that's a B. It didn't take out the left side low, so this is still your starting point right here. So materials, materials. And therefore, you have to count each successive high of each bar that makes a high from the start or low. So this already is getting to D. This is leg E in the daily chart. Weekly chart is still looking poor. I'm going back to what I said. COWZ. I love the name. I love everything about it, except I would have to say it's a little overbought for me, but I'm going to put it on my list of things to watch because it's in three sectors that are, mostly in three sectors that are acting very, very nicely. So very short term, I expect some kind of a digestive phase. If you miss it, you miss it. That's why I'm saying if you want, you could just start your split position and start a little nibble here at 46.70, but you know this is really not perfect. You want to reassess in the mid 45s. I hope that helps you. Any thoughts on Berkshire Hathaway, BRK.B? Yeah, go on to a leg C in the daily chart. It's acting very nicely, but this is the U.S. economy is right here, capsulized in one chart, and that is the monthly chart of Berkshire Hathaway, because he's in so many different buffers in so many different areas. So it's holding for the 1, 2, 3, 4, 5. 4 of the last 5 sessions, now I'm going to say 6 sessions, it's been above the 9 and 14 period moving averages. Yesterday, on Friday, it closed above. Was it yesterday? In the last couple of days, it closed above in the monthly chart. So this is Berkshire Hathaway holding okay, but not great. If you look at the XLF, which is Berkshire Hathaway is in the financials, it's almost the same pattern. But if you look at, I didn't want to do this, but I'll do it because I have to use it as an example. See, Berkshire Hathaway XLF is right on the 200 period moving average in the daily in leg C. I think it made a D today. Yes, sirree. I'm going to put that in, then double check. D. So look how many peak Ds we've got here. So this is 34.23, 34.21. There we go, leg D. right on the 200-period moving average saying, be careful, I can have a little bit of a digestive phase here. But Bank of America is in leg C and it's above it. And the chart formation, look, the weekly is so much closer to the 36.94 level in the arch. Here's another double bottom. I mean, this is the double tops that I spoke about for a year and the double bottoms we've been speaking about for some time. 29.67, July was the low, pops to 36.94, and comes back to 29.31. I mean, really, within 68 cents of the low, and now it's having rally. But if Bank of America can close nicely above the 37.50 level anytime on a weekly basis, all of a sudden you've defeated the downtrend and you now have a buy signal in the weekly chart. That'll be great.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month and try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Before we wrap up, I'm expecting some kind of a digestive phase right now. Once you've made your leg D, and then it becomes a peak D, you've got to wait for some kind of digestive phase to unfold. And if it unfolds at a higher level, that's good. You made a peak E in the NQ Z22. That's the futures, NASDAQ 100 December futures, at a peak E right here. Oh, maybe I'll just better lift it up so I can see the time. Right there at 5 o'clock on the 28th of October. Pulls back, hits the what? The 200-period moving average. And yeah, you've got a peak A. I'll have to do this quickly. A, another A underneath there. That becomes a B. I'm doing this quickly, but I wanted to show you something. D, E, F. And that F is out of the way. You've done it. And now what we're looking at is you've gone under the 200 period moving average, making 11,440 the resistance. But the left side, I don't even want to discuss it. The left side has the 9 o'clock on the 28th of October, low of 11,069 as major support. I think we're in the area right here that says we should be trying to find some support. I think there's a lot of nervousness. You can see that. And just real quickly, I was asked, would I go to the VIX index? Yes. And the semiconductors are rallying. I'm going to be watching them very closely because that to me is also a big clue. So the question was the VIX index. As we go to the my finals segment closure, you're going to go to Steve Rhodes after this. Great programming all day. I'll be back with Tom O'Brien later on this afternoon. VIX is trading up 24 cents at 26.12. It's made a leg D to the downside. It's holding the 200 period exponential moving average. This should be some support for it. If it starts to go underneath 25.30 by the end of the day, if the market rallies, that's going to be good for the market. But if it starts to go to the 26.80s, that's a problem. So those are the levels to watch. I think we just